Now, we've been talking about the US government shutdown and how that has been affecting cryptocurrency and blockchain projects. Now, Bakkt project seems to be unaffected by this. So to get some more information on Bakkt, we are joined with Jason Fernandes. Hi, how are you doing?
Hi, excellent.
Great. So thank you so much for staying on the line and chatting with us today. Now, Bakkt seems to be one project which hasn't actually been affected by the US shutdown. So how will the launch of Bakkt impact the crypto market?
I think it will really provide an opportunity for institutional investors to get in on the game, and I think once that happens, you're going to see a lot of sort of amateur people that have been thinking about getting into the market just getting in because they see the institutional investors jump in, and so they consider that a good place to start.
Sure, and Bakkt has taken some significant steps towards the launch of its Bitcoin futures platform. So can the acquisition of certain departments of the Rosenthal Collins Group indicate that there is a bullish crypto sentiment among the big players in New York?
Yeah, actually, it's a really good sign because it shows that there's been a lot of delays that this was supposed to launch before, and if there's ever been any question about whether they were not launching because they were not bullish on the market, that sort of answers that question because they're clearly investing in this, and them acquiring those parts of the Rosenthal company, for example, will allow them to shore up their AMC, KYC, AML, and also the regulatory situations and things that they have to deal with. So it will shore up a lot of these sort of traditional aspects of finance and reporting that they have to do, and also they have so many people now working under that. I think it's a really good. I think it's a really good sign. It means that they're really confident.
Sure. And just before we joined you on the line, our viewers did see a futures contract video. So could you just explain how a Bitcoin futures contract will work?
Okay, well, I mean, it basically allows, a future allows people to trade off a cryptocurrency without actually owning it. So it protects them from volatility in the real-time spot markets, but overall, it still requires, it's essentially a bet where in the futures market where somebody is betting that the cryptocurrency would go a certain way and the other person is betting the other way. So basically, the winners get their earnings from the losers. And it's essentially, it obliges the holder to buy a certain asset at a certain price at a certain time. And so if you were to, let's say, buy a Bitcoin future for March at the price, let's say that the price, the indicated price, and let's say suppose hypothetically that was like $16,000, and in fact once you got up to March, the price is actually 20, so you would pocket the difference of like 4,000. So that would be how a Bitcoin future would work.
Sure, and you mentioned about the volatility in the market. So who can, if anyone, benefit from a Bitcoin futures contract given the volatility that you mentioned?
I think volatility is basically how people benefit from the market in the first place, because if there wasn't volatility, then sort of betting on a future wouldn't really be that useful. So the fact that it's moving up and down makes it more exciting and more of an interesting thing to bet on in the first place.
And are Bitcoin future contracts beneficial in a mostly bearish market?
So that's a good question. I mean, ultimately, it depends on just whether there's somebody else willing to bet on the other side, because there always has to be somebody on the other side of that transaction. And if somebody was betting that it would basically go worse than it actually is, then you have a benefit over there. So yes, in some cases, it can absolutely work out well.
Now, if we could explain the difference between Bitcoin ETFs and Bitcoin future contracts, how could we do this, bearing in mind it needs to be done in the simplest terms?
Well, like I said, futures is basically where you have somebody on both sides of the transaction, and there's people that are betting, and then there's other people that are betting it will go the other way. And essentially, from the back end, they're basically the same. They're basically the same because both provide you exposure to like Bitcoin, for example.
Sure.
But an ETF would be like an exchange traded fund. It's basically like a jumbo portfolio that replicates some asset. But basically it's different with it just adds money to the existing pool. and it comes down to like being able to buy a smaller amount of so basically like just a $50 transaction or $150 transaction, whereas with a futures it would be like much larger, much bigger ticket items. So it's really a difference on the back end, and also like sometimes in the size of the price of the asset.
Sure, and just continuing with comparing the two, which of these two tools would have more of a significant impact on the crypto market, and how would that impact be?
So since the ticket is generally bigger when you're betting on futures, and the people that would be buying that would be mostly like institutional investors, you're going to see that would sort of move the market more. But in some, as more amateurs get into the market and more, just private investors just in general that are not connected to any sort of banking or financial institution, a lot of them would be more interested perhaps in ETFs. And once that, so you're going to have, it's sort of a different market for both. And you're going to have a lot of people buying ETFs soon after the futures market starts taking off. So you're going to have a lot of retail investors investing in ETFs.
Jason, thank you very much indeed. It's been an absolute pleasure having you on the line and giving your insights on this topic. Thank you.
Sure, thanks.
Now, you can follow up on our social media at Blocks Live TV to get some more information and, of course, the latest blockchain and cryptocurrency updates.